All right, let's take a look here at our trade review from one of our trades from today. And this is ticker symbol BLDR. BLDR. So you can see it popped up on the scanners yesterday at this candle right here. And when it first came up, when I first pulled this chart up right here, truthfully, this again was one of those that at first glance really didn't. I mean, it met the part of the criteria right off the bat. Obviously, we can see this is a valley to river setup that I go over in my income genesis course. This is a valley to river setup, and so now as I begin looking for support or resistance, there's nothing really in the recent future. So then I look back and let's see. Well, last time price was down here, what did it do? And you can see kind of where we're bouncing right here. Look at this point. It's really close to it, but where our actual signal was on this day, look at this right here. So I will draw that in real quick. So we can see that here, here, and here. Yes, it's not a perfect bounce here, but we can see price definitely reacted around that level. Again here, and again here. So this was a pretty decent level. And usually when we go this far back in time, it can get kind of sketchy as far as the strength of it when we're talking about minor supports, which is what this would have been. But because price had been up here this whole time, it made for really any trader looking at this chart, it made drawing this what I just drew really easy if you just look left. So that was kind of my thinking behind it. Was this was an obvious level of support, an area that anybody could look left on and draw the line that I just drew and be able to see that we're bouncing right at it. And so with that, I felt pretty confident in taking the trade if it got triggered, which it did. So let's zoom in. So we wanted to see the break of 54.58. And it did that pretty quickly, as you'll see when we get into the 1 minute. So again, if you haven't watched any of my other videos at Armor Trading Systems, everything is set in place. If you are a member and you're paying attention in the war room, everything's laid out for you. We go over the setup, the reason why I believe in the setup as far as support and resistance and that sort of thing. And then we go over our entry. And the entry is always an exact price. No, that doesn't mean we always get filled at that price or anything, but we know exactly what we need to see print up here each and every trade. And for this one, we needed to see it break 54.58, which means I needed to see 54.59 print up here. So it did trigger pretty early. And from there, it's just determining when you want to take profit. Now, as usual, I'll go over just 3 exit strategies. You do not have to use any of these 3. Like I said, with Armor Trading Systems, everything is in place, but the exit is completely up to you. That's because not everybody trades the same. Not everybody's personality is the same, which means usually what that affects most is when they exit. And so you have to decide what type of exit strategy works best for you. But I typically go over 3 different ones in these videos. Now, the first one would be to exit or begin scaling out at a previous resistance level. If we were bearish, it would be at a previous support level. So right here on this one, the first area that I was watching was right here. The close of this day, which if you look up here, you'll be able to see that is 55.56. So a little over, or right around a point or so. Pretty close to a point. And right there. 55.46. So a little less than a point. So that was my first level that I was watching. It's just because we can see this is a gap. And yes, price did come back into this range right in here, but it never fully closed the gap from this gap down. So that seemed, and we can see, our trigger was in that area right in there. And that's a pretty reasonable move that we can expect. If we get triggered, that's nothing crazy or anything. That's a pretty reasonable move that we can watch and look for. So, with that, when I say scale out, you could take out a quarter of your position, half your position, 2/3. For me, what I like doing, if I'm going to, I usually don't trade this particular way, but if I do, I like getting most of my shares out of my lap at that first level and then move my stop. That way I know that I've made money. I know that I've done well on the trade. And I'm never going to turn a winning trade into a losing trade this way. So I will exit usually about 3/4 of my position and then move my stop up maybe to my entry and go from there. So that would be the first level. The second level for me really was not until right there, the high after this gap down, which this was a really big move. And price obviously didn't get to it. So what you could do, let's just say if that was your level that you were looking to see if price would get to and it didn't get to it, you got a couple or several options really. Number one is obviously just hold it and, turn this into a swing trade. It's not my cup of tea per se, but could be yours. The second option would be to simply exit at the end of the day, no matter what. That is what I would typically do. Was if it didn't reach that level and my stop had not triggered, which again at this point I would have moved my stop up here to my entry or right in there to my entry point, and if that never got triggered, then I would just exit at the end of the day, whether it be for no matter where price is at, just so I don't hold any overnight risk on these trades. So that's the first exit strategy. The second would be to simply just, when we trigger, enter the trade, set your stop. Again, I go over that stop in the war room, and we use that to help us determine position size to completely 100% control our risk. And that is a very viable option. So exiting at the end of the day, it's kind of a risk reward type thing, in that you will catch like this one, for example, you can catch some really big moves. This was an awesome trade, very big move. Price moved up. What is that? What did I say? 54.58. So you can see we're just shy. It closed just shy of 3 points away from our from our trigger, our entry. So that's a fantastic trade. That's a huge trade on a $57 stock. So risk reward. The reward is you can get some really big winners like this. The risk is that sometimes you can turn a winner into a loser. But if you have your stop set in place, your position size is correct, yes, you'll still take some losers, but they will be manageable. You'll be able to control them. They won't freak you out because ideally you will have already come to terms with what your maximum loss would be. And rarely does it actually get to a maximum loss. Usually if it is a loss, it's somewhere, between 0 and your max. So let's see. So exiting at the end of the day, pretty good strategy. It's more laid back. It's just entering when we trigger and then set your stop, let it ride. As price moves up, you can move your stop up so that you won't turn a winning trade into a losing trade, or so that if it does turn into a loser, you won't lose. Your max loss is now lowered, which is always a good thing. Now, the third and final way we'll step into the 1 minute, and that is scalping. So if you are a scalper, this was about as good as it gets. Again, 54.58 was our entry, so we needed to see it print 54.59, which it did, right in there in the first minute of the trading day. But here's the thing, is that once it broke it never came back down at all. It just climbed throughout the day. But especially right here in the early morning, I mean, you could have been in and out in a few minutes and have made pretty good money as a scalper from a scalping standpoint. And that's really on this one. There's not a whole lot to go over because it never went against you. I just want you to look at this and see how well this worked. That yes, once it did break, I mean, it just rocketed, continued up. And the main thing with scalping is to always have your risk needs to still be controlled. Too many times, people who consider themselves scalpers, or even if they don't consider it, but that's the way they trade, is they're trying to be in and out fairly quickly. They don't have a set defined risk. Or if they do, that it's hard to stick to it because that risk is so tight. They're expecting price to always, go against them quickly. They'll exit quickly, but that doesn't always happen. So as a scalper, you need to be able to still manage your risk and still have a stop that you trust in and that you believe in. And one way of doing that is to pay attention in the war room and use the stop that I recommend. Yes, it will limit your position size, which means your trades will be smaller, your winners will be smaller, but you will be controlling your risk. You will be controlling your max loss. And once you're able to figure out how that works and how to do it, then you can start increasing your position size, making that stop a little tighter, especially as a scalper, and you can go from there. But like I said, not much to go over here. I mean, because it worked out perfectly. Broke and then just continued straight up. So that about wraps it up for this video. Again, this was a straightforward cut and dry trade. We had a good setup with a valley to river. We had good support backing that up. And once we triggered, it was pretty much smooth sailing from there. So thank you for watching. I really hope you enjoyed this, able to learn something from it, or just, like I said, just enjoyed watching it. If you will, please like, share, and subscribe. It would mean a lot to me, and I would greatly appreciate it. Thank you again for watching, and God bless.